Welcome back. You're with us here on Bazaar Morning Call, and we've sort of shifted base to an important conference which is kicking off today, which is the JP Morgan 10th Annual India Investor Conference. And I'm sitting down here on the sidelines of it with the man who heads equity research Asia Pacific for JP Morgan, James Sullivan. James, great to have you on the program. Thank you very much. Good morning.
Thank you.
I mean, the big question I think you will get here from investors, etc., is this huge underperformance India has seen over the last 1 year relative to other Asian markets, and of course, I mean, I think other large markets as well. So for the last few years, India and US were the only two sort of games in town.
Right.
I mean, US is still chugging along to all-time highs, whereas India has kind of struggled. Your thoughts?
So no, thank you for the question. Thanks for having me on the show. I think there's two big picture ways of approaching your question. One, from a market-specific perspective, as you very rightly say, we've seen significant underperformance here in India. You've seen 23 billion US dollars in foreign investor net selling over the course of the past 12 months, which has been a real driver of that underperformance. I think it's important to recognize where we entered this conversation though. We had entered this conversation from a period of outperformance. The market had gotten pretty pricey from any valuation metric perspective, and the JP Morgan call was that you would see a slowdown in earnings revisions as we went through this adjustment phase, which is exactly what we've seen. So I think that scene setting is important because the underperformance is off the back of something. Yeah. I think the other reality...
It's correcting an earlier period of outperformance, in that sense.
It's pausing from an earlier period of outperformance, I think is a fair way of saying it, because the medium-term outlook here in India, we still are very positive on. But we had seen pretty pricey valuations, earnings expectations had gotten quite aggressive, and so you needed a period of pause, which we've now seen, and that actually sets the stage for another bout of outperformance from a JP Morgan perspective. The other reality is if you look at India within an Asian context, it's actually very rare for India and China to both outperform at the same time. And so you see this internal rotational trade within Asia quite often. So the fact that China has come off of its lows and has had such great performance on a year-to-date basis has taken a little bit of that incremental capital, particularly from a foreigner perspective, out of India. Now, both of those have occurred, which is great if you're looking forward for incremental performance from here.
I mean, Korea is up 50% this year, right? I mean, it's been incredible. So what? I mean, we're at the turning point now, where this again flips that internal rotations back in favor of India?
So opportunities and risks, and I think they both exist as we were chatting prior to the program. On the opportunity side, you saw the second quarter GDP print come in at 7.8%, better than expectations. JP Morgan has taken up our full year economic growth forecast as a result of that beat. Inflation is coming in at okay levels, but we'll talk about that again in a second. And earnings expectations have become more normalized. And so again, we're setting the stage for potential outperformance moving forward, particularly in certain sectors. The other question that we're doing a lot of work on right now is the opportunity for rural consumption outperformance. We've obviously seen a very strong monsoon, about 7% above historical averages. The potential for that to trickle down into rural spending is real. You then overlay that with the GST reforms that the government has pushed through. And again, that sets the stage for a slightly different conversation moving forward. The flip side of that, from my perspective, is really on the inflation side. If you do see India have to curtail purchases of, in particular, Russian oil, that will have an impact on inflation and potentially create some issues for the RBI. And so there is a balance. On net, we're positive because of the underperformance. We're positive on more normalized earnings expectations and more normalized valuation as a floor for market performance from here. But we'd like to be quite specific. And where you see idiosyncratic drivers like GST, like a stronger than expected monsoon, as a potential driver for rural consumption, which has not been the flavor of the year, then we think that there's some really interesting investment opportunities.
It's a broad thrust area. It's consumption sectors, which perhaps...
I think that's fair, and it's predicated on some of the uncertainties around global trade right now. Yeah. So India, from a manufacturing perspective, the story of India has been services for a very long period of time, and really globally relevant in the services space. The manufacturing conversation has come up over the course of the past couple of years. Given some of the uncertainties in the global trade scenario, there's risk there. Yeah. And so trying to focus on domestic demand drivers, areas that India can control itself, rather than be dependent on outperformance on global decisions that are outside of the control of the Indian government.
I mean, you brought services up, James, and I think services are now part of the trade war conversation. I mean, if I want to call it a war, whatever, dispute, negotiation, but this H-1B issue, I mean, how do you look at it?
So look, it's critical in a number of different ways, and I think from a big picture perspective, the most important thing that we're trying to understand isn't necessarily the visa issue in isolation. What I'm trying to understand, what JP Morgan economists are trying to understand, the trade conversation has been purely focused on trade in goods. This is really the first salvo that has impacted the services space in a meaningful way. And so the fundamental question that we're trying to wrap our heads around, are we now segueing to a more broad trade conversation across both goods and services? Does this open up a new front is probably overly aggressive as terminology, but does this open up a new conversation in the trade discussions that we hadn't really seen at all previous to this? And that's really what we're trying to get our heads around.
In terms of specific, I think your analyst Ankur Rudra has put out a note quantifying the implications, etc.
Yes.
Any thoughts? Is it going to really? IT services has not been loved as a sector for a while now, and this is one more hit.
So you've seen significant underperformance for a whole variety of reasons, inclusive of currency impact, inclusive of the potential risk of what we just saw occur. The question, as always, is now in implementation. When I speak to my government relations colleagues in the United States, when I speak with corporate folks that are exposed to both India and the United States, particularly over this past weekend, post-announcement on Friday, there's massive uncertainty in terms of how this plays out. You've seen a lot of corporates publicly announce that they want their staff to stay in the United States, reduce travel, et cetera. There's significant uncertainty whether this impacts student visas. There's a whole raft of degree structures in the United States, particularly STEM-focused, that result in automatic visas. That program is now up for question. The implementation will absolutely be critical. $100,000 is not a small amount on a per-employee basis, particularly if you look at the average IT services salary in the United States of about $174,000 to $200,000. So this is meaningful in terms of the increase in cost.
And there is that Hire Act as well, right? Which is, I think, was proposed in the Senate. Which, do you think that is also something which caps upsides? Increases uncertainty. We don't know if it'll pass or not. As someone in the morning, a guest told us, it's impractical. Doesn't make sense. But your thoughts?
I think we have yet to see the broader impact of a lot of these programs, particularly on structural inflation in the United States. We've obviously seen a lot of conversations regarding Fed rate policy over the course of the past couple of months. There are elements of the U.S. economy that are starting to change off the back of legislation and off the back of new policies pushed by the U.S. government. We have yet to see how that plays out, particularly on the inflation statistics. So a lot of things to watch from a market's perspective.
In terms of the broader India-U.S. sort of dispute, you think that'll resolve by the end of the year? Resolve when there's 50%. Think about it. 6 months back, India was supposed to be the first in line to get a deal, supposed to be, supposed to get a better deal as opposed to some of the competing exporting countries. It's exactly the opposite. So you think at least the 25%, it's 50 right now, at least the 25%, there's some resolution to that.
So they're discussing the trade dispute right now, and representatives from both governments are sitting down. We'll have to see how those negotiations play out. I'm definitely not going to claim any knowledge in terms of the inner thinking.
What are your colleagues in Washington, et cetera, telling you?
At the moment, we see an administration that is very transactional in nature. Now, that does offer the opportunity for change. That does offer the opportunity for deals. And so we'll have to see how the negotiations play out.
Okay. So they're not saying one way or the other in terms of how this sort of pans out. Do you think the services bit is a negotiation tactic, or you don't think it's a separate thing?
It's an interesting negotiation tactic, particularly from a U.S. government perspective. As we all know, there's a trade deficit in the United States, however, significant services surplus. And so if you're going to start to wander into the surplus side of the ledger, that is potentially damaging to U.S. To overall trade interests. And so my personal view is I think the U.S. government will be very careful to broaden the front on the services side, because then that opens up an area where the U.S. has a structural competitive advantage, and other governments could start to push back in more materials ways than they have access to in the good side.
James, one of the questions, and you cover Asia Pacific, and there are this entire AI theme. How do you think about it? Many people are now openly, strongly starting to say, well, there perhaps is a bit of a bubble building in this space. Your thoughts?
Sure. Smarter people than I have opined on this, in particular some of the corporate leaders of the largest companies in the space. My personal view as a user of AI and as somebody that runs a function and employs a lot of analysts, this is an absolutely critical tool that we have to understand how to use. In a competitive industry, will it result in dramatically lower headcount? Will it result in dramatically lower salary levels, et cetera? I doubt that. I think it will allow us to do significantly better research. I think it will allow us to do significantly deeper research. But in a competitive environment, I think it's unlikely that you're going to see having an employee base or that type of cost savings. It's an absolutely critical tool that both I as well as my team needs to understand how to use effectively. but it's a tool. I don't know that it replaces. It's a fantastic way, particularly, so if we can differentiate AI versus LLMs, because they're very different conversations. LLMs are fantastic at summarizing what the world knows. That's not my team's job. My team's job is to ask new questions, teach the street new things that it doesn't yet understand. LLMs aren't great at that. And so if we segue from summarization of existing reality to a forecast of future reality, which is where my team lives, it's a tool.
It's a tool. But you're not answering the question, a bubble or not, from a corporate perspective, from an investment perspective, capital misallocation, those kind of things.
I think the critical element that we have to remain focused on is a forecast of incremental returns for all of this investment. And at this point, corporate leaders in that space are saying that those returns are very uncertain.
Well, James, we'll leave it at that. Thank you very much for joining us.
Thank you so much.
Have a great conference. Really appreciate your time here.
Thank you.
Thank you. Well, I think, guys, it's back to you in the studios.
Thank you. That was a great conversation.